the production of US in terms of total megawatt hours in mining for Bitcoin. So right now in the US, we've got like 3 to 4 megawatts in Bitcoin mining energy power. And in Russia, they've just hit 1 megawatt, but there's state-sponsored mining projects going on in Russia to increase that capacity even further.
Interesting. Okay, everyone, this is Grant, and this is the Aussie. And we don't have Jarrett today. Jarrett is already at NFT NYC getting settled in. And I can't tell if I'm jealous or not, because on one hand, there's so many cool people to meet, but I think it would be pandemonium. Like, I think like keeping up with the Joneses. I don't know. What do you think, Aussie? Like, if you were there, would you feel exhausted just thinking about trying to hit all the satellite events and all the events? How would you feel, you think?
God, I think I'd be exhausted. I'm already thinking about the fact that we're going to be there for 2 days, and we're all
exhausted already just thinking.
Yeah. I'm already tired, like thinking about it. I've been like planning how I'm getting down there, trying to figure out with you where we're going. I'm like, oh Lord, this is gonna be wild.
But if anyone could swing like that, it's Jarrett. I mean, he's got that young blood energy. He's not in a deeply committed relationship, so he's got no like people to call. He's got a good job, a W-2 or a Web2 job. He's got
W2.
And so he's got a lot of projects. So, but he has that flexibility, and I think about my Web2 job, and I'm like, I'm looking at my inbox pile up today, and I'm like, oh my God. So I'm grateful for the time we'll be there, but it does seem overwhelming. But we're manning the ship, folks. And today, Aussie and I, and Aussie really, because I'm just the guy asking questions, because I haven't paid attention to these two major topics. But the one you stumbled in on us talking about was the block space wars. Now, we're going to talk about Ethereum Shanghai, absolutely. But Aussie, I want you to continue with this thought. For those piping in, Aussie was just saying that Russia, it just hit 1/3 of the same megawatt usage that the America uses mining Bitcoin, but the projects coming online now are state-sponsored, so that those might accelerate and maybe even surpass us. But you said before this, and I do want to dive into this, the block space wars is a hypothesis about the fact that the blockchain is immutable. There could be future wars about data on the blockchain?
Yeah, they think a U.S. Space Force major has basically theorized and speculated that there will be battles for block space and the ability to put things on the Bitcoin blockchain and other blockchains. And
interesting. Wait, let me catch that. They're not fighting over data that's on the blockchain. In this hypothesis by the Space Force major, he or she is hypothesizing that a block might get mined, and the space to put information on there will be fought. Like just the space available is the war that they're going to fight over.
Yeah, they're gonna fight for the hash rate so that they can make sure that their data gets there and becomes on the blockchain. So there's
what?
like, yeah, this is a huge theory that they published there at MIT. This major, he's Jason Lowry. He's at MIT, and in his 400-page dissertation,
400-page dissertation,
is arguing that there will be competition for not only data but the block rewards. So battling for both of them.
Oh, so so they'll be battling for the reward of minting a block, especially as we surpass the $1 million mark and beyond. So you think they might throw some, incursion into Europe or into Alaska, and that cause a war because like they're directly like, how do you fight over that? Like, what is the projected way that he's proposing? Like, will it be a digital fight like hackers, or will it be a physical war?
I feel like it'll be a digital fight. From my understanding is that essentially it's being able to project power by how much Bitcoin rewards you're mining and by how you're getting your data and your information permanently, immutably stored on the blockchain.
Because in some ways, what do they say about war? the winner writes the history of the war. And in this case, if blockchain is immutable and it becomes one of the few actually immutable ledgers of history of what went on, I could imagine state actors wanting their side of the story absolutely written, if you will, into the blockchain. So yeah, I could speculate. I could imagine, like they know where our power grid is, so power grid attacks, so that, and then actually trying to, decide when and where when a block might be mined, and then causing power outages right at that time so that you're the only player during that mining period. So there's got to be like a whole group of analytics scientists. So this was not the Space Force. This was a major in the United States Space Force as their PhD paper.
Yeah, as their PhD paper. And they are, from my understanding, one of the lead, or if not the lead, on cryptocurrency within the Space Force.
This is nuts. Now, Tristan, real quick, starting my chain domination today, does that mean you're buying like a heavy gauge gold necklace? Like, what are we talking about, Tristan? Are you starting a blockchain? Do you have a funded project in that domain? Or do we need to talk about funding our own blockchain? Real quick, if we were to start our own side chain or parachain, Aussie, what would you start a parachain on? That you hope the world would adopt as some oracle of a certain amount of information.
I'd build it on ETH, and I'd build it around, I think, real estate and deeds.
I agree with you there.
I think that's like the use case there. Deeds and titles worldwide are a huge issue. If we think about the developing world, on how basically people can have their title and their basically their ancestral lands or their familial lands just ripped out from under them because they don't have a good title system.
Just contested. This is a brilliant point. Now, you and I talk a lot about real estate and NFTs, or a bit, and we speculate a lot. And most people are discussing NFTs around real estate from the idea of fractionalization or funding. But this idea of deeds, have you heard of anyone actually trying to work on the deed chain?
No one has, at least not for real estate. The DMV in California is doing car titles, but only as a backup system to their existing database. So,
and what chain? That's all on Ethereum?
Tezos. They're working it on Tezos. So
interesting choice.
Yeah, it's a very interesting choice. I don't know how they ended up there, but very interesting choice.
Yeah.
But they're not really going to the extent that I think you can go with deeds, and they're not really exploring the full use case. Imagine being able to sell I could buy my house from you, Grant, without ever needing a real estate agent, without needing to see a lawyer, without needing anything, because on chain, we can basically queue up a transaction. Your deed to the house is an NFT.
Yeah.
I make an offer on chain for your house.
Yeah.
And the transfer is done on chain. I send you the 400, 500,000 to buy that house from you.
Yeah.
And I just immediately get the title transferred to me as that amount is transferred to your wallet.
Yeah.
And
it's interesting because, in the world of blockchains, as we talk about an idea like this, one must venture a guess. Do I build, like if I'm going to make a pitch to an investor, do I pitch? I'm building the home ownership title deed comprehensive, Polkadot, which is like its own macro chain. And then in the world of Polkadot, there's all these side chains. And so or do I just work on an individual chain and try to build in the hooks so that eventually when, say, for example, the home repair chain gets built, like right now, we'll just carry that metadata. But what if someone comes along and says, okay, well, I finally have built and invested in the architecture for repair chain. We can just hook in. Because when I think about titles and deeds, there's financing. So like the idea of building in the financing and the verification of funds right now, get this. Right now we've got an offer on a cocoa property, and I didn't even update you with this, Aussie, but we got it pre-approved. Our financing is fine. We have renters. We have rental incomes on properties. We heard back yesterday, and the underwriter said, hey, because of the FHA loan, this type of loan you're using, which is basically the Federal Housing Authority, you get a lower discounted deposit, 3.5%. Well, there's a crazy 100-mile rule that if you're moving less than 100 miles away, which is bizarre, you cannot use the rental income from the property you're leaving. Bizarro rule to qualify. And so, we have a significant part of our represented debt to income ratio is rental income. But if you move more than 100 miles, theoretically, like
You're fine.
it's fine. Like I would have thought the opposite, because like maybe they don't count that these rents will follow me into the new property. I don't even understand it entirely. But my point is, it's a super nuanced rule. In the world of smart contracts, when someone builds the financing chain, and financing, like it would have to be so specific as to be the pre-approval chain. All of these are then dependent on ZK proofs. So like an identity chain. So whether we're talking about Social Security, so there's all these side chains. I don't know how a title could transfer without these other, like, can you build a chain without these other components? I don't know if that's even possible.
I mean, you could, because you could basically say that proof of funds and everything is approved. The funds are on chain, and then you just do the transfer on chain. Only the transfer itself is done on chain. And so proof of funds, proof of reserves, everything else is, you could start
Done
off
normally.
chain. Yeah, it could start off chain, could start normally.
Because you have to file the deed or the title at the county records office, or in your case, the municipality or something. And so, yeah, there's a lot of off-chain stuff that has to happen, but I guess you could lay the groundwork, because if someone tried to back out or someone tried to cry foul, you do have the blockchain ledger to point to the transaction details and say, no, they double sign this. And maybe you don't even bother with verification of funds except the deposit. Did the deposit get transferred? You could write the smart contract so you don't even have an escrow. You write the smart contract so that it's just committed. But then this is a great example of some of the challenges why people aren't tackling this. In an off-chain, in a Web 2 transaction, it goes into an escrow, and that escrow is only released by a title company when they show that this person's legit and set, this person's legit and set, boom, let's release the funds. We know that systematically can be automated, but the build out of that is nuts.
There is quite a build up to make it happen, but we could start in my county and basically go through all the deeds in my county, work with the local county, all the deeds, everything from from the county database is uploaded to the chain, and you get basically set up the deeds and set it up for that one county.
Yeah. No,
and then you do county to county, and you just slowly build it out.
You could do that. Tristan says, would that contradict monopoly rules, though, if there's only one chain for that specific area of business? And Tristan makes a great point. And his point, though, can probably help us understand blockchains a bit better. So Tristan, in this case, when we talk about a main chain and a side chain, the comparison being like Polkadot and Polkadot side chains. Polkadot actually, I think, correct me if I'm wrong, Aussie, I don't know the nuances of this mechanism, but Polkadot only has a limited number of slots for its side chains. I think it's like 9 or 11 slots or something to that effect.
16. I think it's 16.
Okay, it could be 16. And they auction them off, if I'm not mistaken. So Polkadot themselves, are not the owners of the side chains. And the side chains could have multiple functions, right? But all that Polkadot owns is the underlying architecture. And so you're probably right. Like if you owned all of the chains, That's one thing. But one thing you could do is you could say, what is core to a real estate transaction? Is it the transfer of title? Is it the deed? Is it the contract making? The proposal? You could actually say, what is the backbone of an actual real estate transaction, and build the core, the spine, if you will, of that as the central main chain. And then from there, maybe even auction off yourself or partner with people to build the side chains. For example, what also you're talking about is title or deed registering at the county level. Well, there's like a municipal title chain that would have to be built just for that.
Yeah,
It has very specific
needs.
needs and requirements. Yeah. And then someone's got to scan it and make that worth value. And so what would the value be? It'd be speed of contract. Um, so you'd have to look at the value proposition and kind of triangulate, well, what is the spinal column of a real estate transaction? Maybe it's just funding. I don't know. But
Well, I think there's a million things, and I think one way that you you basically take out monopoly rules with the one chain is like, you could have a main financing chain, which is the architecture for all chains, for all financing chains. There could be the Bank of America financing chain. There could be the JP Morgan financing chain. And so within the architecture, each sub bank or each offering for financing, for example, could have their own sidechain with their own slight different quirks and their own slightly different requirements that are built all within the data feed for.
you know what this keeps coming back to for me? The center of all these chains is identity. Because you mentioned the example of the Bank of America chain, and it's like, man, like that boils down to identity, which then backs into zero knowledge proofs. And so I don't know much about the Sol token that Zuck was it Zuck that was talking about the Sol token? No, Vitalik was talking about the Sol token. Basically, your Ethereum address that travels with you everywhere and is kind of the main pillar of zero knowledge proofs. Because I like the behavior of blockchains. Like I like that I can selectively choose anonymity. Like when we talk about our real estate chain, we should be able to flick a switch and go, I'd like this deal to be anonymous, but my address be on there, you know? But then I think about all the types of hooks that have to exist. And I wonder if Cardano isn't already built out for on-chain for this sort of use case, because they have invested so much in identification hooks, financing hooks, research hooks. Like, how do I crawl this thing? I wonder how that looks. Do you know anything about Cardano's chain?
I don't know enough about Cardano's chain. That is probably the chain I know the least. Well, of the majors, if we talk EVMs, I know enough about most of the EVMs. If you talk Polygon, Matic, and Ethereum, I know a decent amount about Solana.
Yeah.
Cardano, if we talk about kind of those main topics, is probably the one I know the least about.
Yeah.
It's the standard meme, and I haven't dived deep enough into it to understand why it maybe isn't actually a meme.
Yeah, man. So, okay. So let's get back to some block space wars real quick. So this guy wrote a thesis. Does he believe in the thesis, or is this a hypothetical war games sort of? What is your impression of how people are responding to it? Is it more just a hypothesis that's interesting, or is it like a viable possibility?
I think it's a viable possibility because I think he believes in this. He believes in the need to mine Bitcoin as a strategic imperative for the US.
Interesting.
He, in one of his tweets,
as a war tactical advantage.
Yeah.
A geopolitical
to maintain or else it risks losing its lead as a global superpower in the 21st century,
which is already happening with the de-dollarization.
Yeah.
Interesting.
Exactly. One of his tweets says, "Our First Amendment rights to free speech will not protect you from government regulators who are actively maneuvering to ban Bitcoin under the argument that it represents a threat to national security. Your best bet is to argue that it would be a national strategic security hazard to ban Bitcoin, and it would be against the Second Amendment, not just the first, to ban Bitcoin.
Interesting.
It is an undefeatable argument in his eyes.
Interesting. Yeah, so that would be something to hear regulators about face from a national security global power position, because and you know what's interesting, even if they don't want to believe that, the great agitator Russia is has some advantage. Like, what if we just want to start doing business in Russian rubles or Bitcoin, literally because of Bitcoin liquidity? And was it OPEC that agreed to start doing business in the Chinese yuan? What organ?
There's a whole bunch of them. Saudi Arabia, I think Malaysia just took a huge investment from China, and part of the deal has to do with basically keeping money under, doing some of the deals in yuan.
Interesting.
Indonesia has talked about it. Like there's a good dozen plus countries. Russia now does more deals in yuan than they do in US dollar now.
Oh, I bet Brazil. Tristan says Brazil.
Yeah, Brazil is one of them. I knew there was a South American, and I couldn't remember if it was
in the
Brazil
Chinese
or Argentina.
yuan. That
India is another one.
Really?
Yeah.
And do we have like infographics or like Visual Capitalist? I love that website, Visual Capitalist. Do we have visual graphics somewhere that are starting to show the percentage? Because these headlines sound great, but if it's like, oh no, they just started doing a little bit, but they're still doing 85% of their transactions in US dollars, or is it significant? Like, is it really hitting hard? I can see your fingertips going. Yeah.
I'm trying to see, because I know. So I know that a statistic that's being thrown around is in the 1990s, about 80% of global transactions were done in US dollars.
Yeah.
We are now just under 60% of global trade transactions are now being done in US dollars.
And okay, that's not a little bit.
No.
That's pretty significant. And then, like, I wonder how much of global transactions now is crypto, not just Bitcoin, is crypto representing? I mean, it's got to. I mean, is it even a point?
I don't think so. I'd be surprised if it's a point at this point, unless that's the route that European countries took to buy Russian oil. That's because they were accepting Bitcoin for their oil. So I don't know whether or not that would have caused a significant uptick in terms of dollar volume in Bitcoin.
So from Swift banking system, I've got. Okay, I'm going to actually just share my screen on this. This will be interesting. So let's see here. Share screen. I'm going to go here to... There we go. Got it. So we've got this screen right here. Boom. This is from Statista, and this stat is from Swift Banking, actually. And you're right. As of January 2023, the US dollar from Swift Banking. Now, Swift Banking, by nature, excludes any crypto, right? And Swift Banking could also be tilted because what are the governance mechanisms? What are the governing countries of that? But the US dollar only represents 45%. The euro, 33%. Now, I'm surprised by this. China still only represents 1.33%, and this is just within Swift banking. But that number has got to be indicative of something. And then the ruble is like a fraction. It doesn't even appear on this chart.
No, the Chinese, according to some other numbers, about 7% of transactions are currently being done in Chinese yuan. Now, outside of just Swift, but it's up 2.5. It's up almost 3% just this last month.
What is
overall transactions in Chinese yuan?
Interesting. Okay. Now, what are the implications of this? Like, I know that we're here to talk about crypto. What are the implications of this from an economy standpoint of the West? What does this mean?
Well, for the US in general, it means they're going to have to actually start paying their debts, because they can't, if you can't if you're not the global reserve currency,
Yeah.
and you can't basically print money to bury your debts, to pay your debts, because people aren't taking your money, using your money for trade, and you're not getting fees from people using your money for trade, essentially your money starts losing value. Starts becoming the strongest dollar, and whatever is replacing it is what's going to take that share. And so you're going to be losing purchasing power. You're going to lose the power to basically continue to print dollars and make money as much, basically print money in thin air, because people don't want your dollars anymore. It's why we get runaway inflation in so many, less like third world countries, essentially, because people aren't doing trade in their dollar. And so their government is printing their dollars to pay their debts.
So, and the reason we're on this, folks, for those who are just piping in, is what we're actually talking about is block space wars, and how there could be future wars over recording history. But really how we're here is that in this manuscript, he calls for this being a national security issue. And if we're already losing purchasing power, you would think that if this were if this gets floated to the National Security Council in the United States as a legit possibility, you might have pressure from the legislative bodies, and honestly
from the military itself,
from the Security Council, to say, hey, listen, these regulators need to quit pushing against crypto so hard, because we're already being de-dollarized. And that's just happening because of economics and inflation. Now, what we're doing is they're competing on velocity of funds. If I can do liquid crypto from the euro to Bitcoin to the ruble, then that's nuts. Now, how does FedNow play into this? Does FedNow compete with this?
FedNow I don't think it competes with it. I think FedNow is some attempt, basically a stepping stone to show that they've got the capacity to handle a CBDC. FedNow is not. Some people are saying FedNow is essentially a CBDC. FedNow to me is just a step towards a CBDC, but that doesn't really protect your velocity of money, doesn't encourage people to transact in your dollars, because if you're still devaluing your currency through printing, and then there's no interest in continuing, even if it's moving as fast as crypto, doesn't necessarily mean that it's gonna solve the problem of the devaluing of the dollar.
So what we're saying right now is still the largest culprit is inflation, if I'm hearing you correctly. The largest culprit is still inflation and a devalued dollar. So, this is the argument Big Daddy Jay Powell says when he raises our interest rates. So do you expect another point or so?
I'm expecting at least another quarter basis point. So I'm thinking this in 20 some odd days, we're going to see another interest rate hike. It's not just inflation. I think this is really important. So it's also the total supply of US dollars.
Yes.
So when they bailed out the banks, or they didn't bail out the banks, but they bailed out the banks. After SVB, they printed a bunch of dollars. And so by printing those dollars, you're making every other dollar that in existence less valuable.
Yeah.
And So yeah, I totally expect another rate hike in May, and the market isn't believing Jay Powell, and when they say that that interest rates are going to stay stable or continue increasing, or at least staying stable through the end of the year, people are still expecting him to pull back. In December of this year, right now, CME futures are predicting with over 50, over 70%, 80% are saying that interest rates will be lower in December of this year than they are currently.
Now that's interesting.
80%.
That's
And
interesting.
there's no way.
80%. So 80% of who again?
Of basically economists, market, basically people that are betting, like basically people that are putting options and futures on where the interest rate will be, are saying it's going to be below current rates by December. It basically is, there's interest rate traders. They, just like there's options traders on food and everything else, 80% of them are saying it's going to be below current rates right now.
I mean, they would have to not raise in the next session and then progressively raise. I mean, that's tough to imagine. I mean, it's only I don't know, it's only 6 months away, but no, that's
yeah, it's 6 months, 6 meetings. It's 6 meetings away.
Yeah. So, okay, so what's Tristan getting at here? Inversely, though, global deficits in the dollar prevent that, though, correct? Unless you're talking about global default. Prevent what exactly? Do you kind of understand what Tristan is saying, what he's referring to?
I'm saying global deficits, but global deficits, yes, lead to printing dollars. But everyone prints dollars and yes, a lot of deals are being done in US dollars, but if they move to paying defaults in wons, then it doesn't necessarily prevent what you're talking about. You could have, I don't think you'd have a global default. You would have, because the US dollar would become so devalued, it'd be a US default. If everyone starts doing trade in won or the euro or anything else, then the default will only be, the US is the only one that's going to default on their debt, because other people will be using other currencies to pay their debt, which will be holding their value.
Interesting. And I mean, wouldn't it, you would think that the logic and rationale behind something like Bitcoin would make even governments go, listen, no one can mess with this value except market makers, like people sitting on the largest chunks of Bitcoin. Like, these are the only people that can really affect this market. So maybe the race that your shift from world reserve currency in totality. Oh, okay. Inversely, though, global deficits in the dollar prevent the shift from world reserve currency in totality from USD to won, unless you're talking about a global default. That's interesting. So, Aussie, what you're saying in response to Tristan here is that they still could pay back their potential defaults in Chinese yuan and it make them flush from their debts, but then continue the de-dollarization of the United States. Is that what you're saying?
Yeah, I'm saying yes. Even if your debt is in USD, you can do trade in won and then pay down your USD. And because USD will be losing value, you'll actually be protecting your ability to pay down that debt.
Yeah, and it snowballs, because if they're doing trade in the won, there's lower, use and value and purchasing power for the US dollar in theory. And so you've done your trade in won, your debts come due, you pay down. Well, you said I owed, $1 billion plus interest, and now your purchasing power is entirely lower. So that's no problem. But existing debts in the USD would require the US to accept that as a new currency to pay current existing debts in the US.
So that's
What's he get? Well, first off, could you explain to the layperson how you interpret this question?
So basically, he's saying, most global debts at the moment between countries are held in US dollars. And that's part of how the US dollar is the global reserve currency. And in order for countries to pay their debts to the US, which there's a lot of countries that are in debt in the US dollars, the US would have to accept whatever currency they're willing to make that payment in. What I'm arguing, and so in order to pay the debt, otherwise, if the US wouldn't accept the won, for example, as the new currency to pay the debt, it would cause global default because no one would be able to pay their loans because they wouldn't be using the US dollar.
Go ahead.
What I'm arguing is that you can do trade in other dollars, and then just because the US dollar is losing value, you just convert that other currency into US dollars and then pay your debt. And so the US wouldn't have to be accepting another currency to pay down for those debts, but instead it would just be, hey, we'll transfer some of our from our new currency to US dollars to just pay our debts, and that's the only way that we'll do our trade. That's the only way we use
new
our
currency.
US dollar.
Yeah. So why those borrowed USD funds got converted to won in this example? The won is growing in purchasing power. So not only are they doing trade, hopefully increasing the amount they have, it's also gaining against its spread against the US dollar. And so it's like extra interest. It's like the inverse of inflation. It's deflationary, right? And so meanwhile, there's an acceleration between the purchasing power of the two. And so then you liquidate your won to pay off. You're right. We do have to, these large debts do have to get paid off in USD, but you just convert last minute and send it off to them. And when you convert last minute, you've gained so much. I've pictured this kind of like what happened with SVB, when the Y Combinator people are like, I've got 10 million that's about to get liquidated. I don't want to move it to another bank, so I'm going to move it into Bitcoin. Bitcoin hyped from 16 or 17,000 to 28,000. We all know this. And now they're like, wait, why would I convert it all back to US dollars except my debts? So a lot of capital, not all, but a lot of this capital is staying as Bitcoin. And I wanted to bring this up because if we didn't mention this, we'd be out of our mind that right now, boom, we're looking at we're at 30,000. This is 30,100. Just a moment ago, it was at 30,400. You break 30,500, you've got momentum against a resistance line right to 31,000. And in the last 7 days, that's a 7-day bump. We know that this is volatile. This can tank just as quickly. But for now, it seems like well, and let's venture this guess. My guess is that there's still so much liquidity that capital and liquidity stayed in cryptocurrency, so it didn't bottom out. That built some trust, and now it's seeing new inflows. But I'm not sure. Aussie, why do you think we're seeing these numbers in crypto right now?
Because people don't believe the Fed.
You think it's that simple?
Well, I mean, let me look at the stock market. I haven't looked at the stock market today. But I'm assuming the stock market is up as well.
Okay.
So,
okay.
Let me look at NASDAQ 100. Let's go look at NASDAQ 100. Okay, the NASDAQ 100 is down today. I will plead. Okay, I was gonna say one big thing is, well, partially it's fun money. that's part of my reasoning.
Okay.
Is Bitcoin's a risk-on asset. Some people have just become fatigued with bad news, and so they're not reacting to bad news, and they're not having a big bad news event aren't having as huge an impact. And it's the same thing with big positive events, though. Like MicroStrategy bought a bunch more Bitcoin. Normally that causes a pump in the market. No one's batted an eye at the fact that MicroStrategy's bought more Bitcoin.
Interesting. Okay. So that's now we got jobs numbers last Friday when the markets were closed. How were the jobs numbers? Do you recall?
They were good in some ways. They were bad in others, like depending on who you are.
Yeah.
Job openings are down overall.
Interesting.
So that is good for the Fed. That means we're on the right track. Lower job openings means there's less jobs per people unemployed, which means the chances for a wage inflation spiral to occur decreases. They've already said that they don't really think that that's a huge risk at this point in time, but they want to see the number of openings go down as an incentive of showing, hey, the market is slowing down. There's less velocity of the dollar. The dollar is not we're not spending more. We're not growth is slowing down a bit.
Yeah.
And so that's kind of been a sign that they're looking for. The thing is hires, quits, and transfers have stayed about the same. And so it means that people are still able to either quit their job, transfer, and get hired within the US.
Interesting.
At the same level. So the ability to move between jobs is still rather high and rather easy. And so if you're looking at it from a standard American perspective, there's less jobs available, there's less job openings, the economy is not doing so well, it's harder to find a job. Yeah. But when we look at, and for the Fed and for people that are looking at this other data about transfers and hires, really, hey, people are moving around just as well. Job openings are down, which is great, but there's still strength. We're seeing the weakening in the job market, but the labor market isn't really that weak. And so
interesting.
It kind of incentivized, we can do another rate hike. Job market isn't tanking that hard.
Yeah. Interesting. That is interesting. And I guess we always get into some of this when it's just you and I, because you got your pulse on what's going on economically. But there really is a serious. I could see how the United States Security Department of Homeland Security, the Security Council, could really think it's a major problem that our dollar is being removed from so many countries. And then, therefore, tying that together with these block space wars, it's like, if that becomes real pressure to the Fed, if that becomes real pressure to regulators, they might just let off of cryptocurrency and let development happen. And maybe that will cause them to embrace a CBDC. Maybe it will cause them to maybe just not push so many lawsuits against cryptocurrency at large, except true bad actors. I don't know. It would be quite interesting. But if I may, with the remaining time, let's talk a little bit about the Ethereum hard fork. So this is known as Shanghai. It's a hard fork. Now, real quick, to your knowledge, when we have a hard fork like this, as I understand it, the code splits. And this is where we got Ethereum Classic. Is this such a hard fork that there will still be passionate people who don't make the transition to the Shanghai hard fork?
No one's not making the transition to the Shanghai hard fork.
Why is that?
Unless they don't want money, essentially. Essentially, if they don't value money, either in the form of cryptocurrency, in the form of Ethereum, then they're not going to move on to this hard fork. This hard fork is essentially the pinnacle of ending of the transition to proof of stake, because now people this is the end. This is like the big kind of final closing that really makes becoming a proof of stake validator on Ethereum interesting and valuable. So up until this point, you could not withdraw your ETH that you staked. So that 32 ETH, which is now almost 64,000 US dollars.
Yeah.
You could not withdraw it. It was permanently stuck there. Some of it's been permanently stuck there for over 2 years. And
interesting.
Even to a certain point, block rewards that you were getting from transaction fees from being a validator were locked. Okay. So that 4.2% that you were getting a year on your $64,000, you couldn't claim it. You couldn't access it. And therefore there was a certain disincentive to become a validator and provide greater security to Ethereum.
Now, that mechanism, though, was intentional because they wanted people who were going to stake their 32 Ethereum to be a node validator. They wanted them to be serious, and they wanted them to be around for the long haul. So this wasn't a bug or a miss. This was part of the plan. So if you got in, I can imagine the incentives did defer or did dissuade some people to not become a validator. They didn't want their 32 ETH to get locked up. But didn't that create stability in the network?
It creates some stability. It also created, like, I could definitely see if that ETH, because it was about, at the moment, it's about 15% of the circulating supply, or 15% of the total supply of Ethereum right now is locked up. You know, you could have seen greater drops from, if we think back to FTX or any of those big events, you could have seen a greater drop in total ETH price just because there was greater liquidity. There was more ETH to be dumped.
Yeah.
Absolutely. So yes, but at the same time, I believe with this, it's still a 3-month lockup. So even like you're still committing for 90 days, but
sure,
you, after those 90 days, then you're free to withdraw at any time. And so it provides,
you lose your status as a validator, though.
You lose your status as a validator.
Yeah.
So it's kind of a middle ground of, yes, you're forcing people to commit and you're adding stability to the network, but you're also providing that incentive and that liquidity for people who do want to become validators. But maybe that 64,000, you're a real crypto maxi, and that $64,000 in ETH is like your emergency fund. It's like your emergency fund.
Yeah.
And so, like, you know, there's that chance, there's that off chance that, you know, your house catches fire, and so you might need that money to buy yourself a clothes and get yourself somewhere to stay until insurance comes. And so, you know, having that ability to withdraw it does provide a potential incentive for people to stake.
So it's estimated to be around 18 million ETH that is now available. Why are folks afraid of this upgrade?
They're afraid of this upgrade because they think that it's going to lead to a huge jump on the market.
Jump?
A dump.
Dump.
A huge amount of that ETH. They believe, for whatever reason, that all of that or a portion of that ETH is going to end up on the market and sold from people that were holding it and had staked it.
Interesting. And we talked about this. For those who don't know, like, I have my Ethereum on my Ledger Nano, and I have it staked through Lido staking through the Ledger Nano. And Aussie and the guys reminded me a few weeks ago, because I said I haven't gotten any rewards. I haven't gotten a notification about rewards. And the idea is well, because you're staked, bro, and you can't until after Shanghai. And so, like, because it's the blockchain, have my rewards been calculated? And so I'll get a certain amount of staked rewards. It just hasn't been distributed to me yet. Is that kind of what we're talking about?
Well, that's it. We're waiting till tomorrow. Tomorrow it'll start getting distributed. And so it should start being, once the hard fork goes through, it should be able to start being distributed. It'll probably, for those kind of platforms, it'll probably take a week or so for them to calculate exactly who's owed what and where it all goes. But yeah,
what's your sentiment? Do you think it's going to cause a dump in the market yourself?
No.
Why not?
There's anyone who was willing to stake for the 2 years that since staking is opened up aren't just gonna suddenly dump ETH on the market. Because some of that ETH was probably staked at $4,000, so they're probably sitting at a 50% loss. So they're not gonna dump. They're not gonna dump their ETH.
Yeah.
And the other big factor is about 60%, at least 60% of that ETH is staked through services like Lido.
Got it.
So really, those people, because I think your ETH is probably an ST ETH.
Yes.
So you could technically sell that ST ETH on the market. It probably had a discount. It was probably selling at a discounted rate, but you could sell that for ETH at any given time.
Sure.
And so any retail investor who was staking through these investments, through these different services, had that liquidity if they needed it.
Interesting. So
even if it was at a mild discount.
So it's the validators themselves that really felt stuck, but anyone that might have been staking in general could have technically swapped out ST ETH for some ETH. The ST ETH is still staked; it hasn't moved, but it's swapped with someone else who's willing to hold that. That's interesting. Okay, so is this it for the Shanghai hard fork? Is this the major highlights, or are there any other changes going on with the hard fork?
They're working on the API. They're doing some API work that I don't understand well enough to bring some of that that zero knowledge ETH, though those permanent addresses. They're working towards that, and they're working towards the sharding. So there's moves that are happening on the chain that are also kind of enabling future hard forks. Most principally the one around sharding, which will help reduce gas fees overall.
So after tomorrow, we should see a progressive reduction in gas fees?
Not tomorrow. Tomorrow is just enabling the potential that the next upgrade that will lead to the reduction in gas fees. So this isn't going to affect gas fee prices at all yet. It's just building to that.
Interesting. Now, real quick, just because I cannot let this go, because it's so science fiction, I have to hear this. The block space wars. Did this guy give a timeline on when the demand for space on a block is so high that they'd be willing to hack and go to war over?
Not that I've found. He does talk about it
Who
being
is this
the
guy?
21st century.
What's his name?
Major Jason Lowry. He's published, his dissertation is being published as a book called Soft War, a novel theory on power projection and the national strategic significance of Bitcoin.
So not Jason P. Lowry.
No, Jason Lowry, Major Jason Lowry. So it's supposed to come out later this year. I don't know exactly when. But
dude, I'm going to start following this guy. Major Jason Lowry. Come on. Where's this guy at? There he is. I'll have to find. It is Jason P. Lowry. Yeah, that's who it is. The software. Yeah, that's who it is. I'm already following this guy.
Oh yeah, you didn't see his tweets?
Well, I didn't have his notifications turned on. So a novel theory on power projection and the national strategic significance of Bitcoin. That is just nuts. I'm going to buy this guy's book. This is crazy. Now, so do you buy into it? It's kind of like, do you think Ethereum hard fork is going to see a major liquidation? Do you think that this will come to fruition? Do you think wars will be waged over block space?
I feel like there is a reasonable chance that there will be battle for block space and blockchain rewards. I mean, I'm thinking about Bitcoin, and imagine being able to back your dollar at least partially with Bitcoin. And
at the national level, you mean?
At the national level, you were backing the dollar at least partially with Bitcoin.
Okay.
So you're maybe backing it with Bitcoin, gold, and other things. And so your dollar now has something that is actually promoting and gaining value and maintaining value. And so being able, just like gold, or even better than gold, there's a finite supply. And it doesn't depend on where your resources are. Like, do you have gold deposits in the US or in China or wherever? It's dependent on your mining power. your ability to mine those rewards to back your dollar.
And let me ask you this, like, I think we'll be mining Bitcoin until like for 150 years. Like, I think the date goes out a little bit. What happens when the last block is mined? What happens to the value of Bitcoin then?
I feel like at that point it could continue to grow exponentially.
But how are transactions recorded at that point?
That's a question I know. I think that's the big thing. I think the chain still exists,
The
but
chain
you've got
exists,
to.
but the immutability, if we trade Bitcoin, Bitcoin is the blockchain on which that ledger is written, but there's no new blocks to be mined.
There's no new rewards to be mined. That's the difference. There's no new. The blocks can still exist. There's no block rewards. And so finding a reason or a way to incentivize block Bitcoin miners to continue mining in the future is the biggest question. I think that's troubled the Bitcoin community for the next until blockchain rewards disappear. You should be finding a way, building up an emergency fund of sorts to essentially incentivize miners to keep mining after rewards disappear.
Well, and the interesting thing is that like computational power at that point should be so ridiculously fast that maybe it won't matter. Maybe you and I won't have to be running large Bitcoin mining farms anymore because computational power, GPU power, I mean, it's just going, I can't even fathom it, right? And so a new block computationally, and I wonder even if there are no rewards then, if the algorithm changes and resets to not be as difficult. Because all we need is a hash for the subsequent block, but we're not rewarding anyone for proof of work at that point. That's interesting. I'll have to dive into that a little bit and see like how this will work once we've mined the last Bitcoin and what some of the speculators are talking about, because if Bitcoin is as immutable and fixed as it says, that means we can build up a lot of assumptions. If we can build up a lot of assumptions, when those assumptions can no longer be supported and that thing collapses, we can almost predict major shifts that go on once the last block is mined. And a lot more money will be made in that shift too. So that's quite interesting. All right, shout outs. What's your shout outs today, Aussie?
I mean, Tristan, thanks for those awesome questions. That was like, that definitely like is amazing. So big shout out to you. And I mean, big shout out to anyone who's going to be joining us at NFT NYC in a couple days. Like, huge shout out to you guys.
Yeah. I mean, and I would give a shout out to Jarrett. He's not here. He's already in New York. Shout out to those, as we've said, who have committed to visiting with us and doing our little meet and greet. We're super excited just to like meet everybody IRL. No big pressure there, but we just want to connect with everybody. Jackie Roach, George Todorolo, and maybe I'll actually learn how to say George's last name correctly. My last name is Naidu, so it's Nieddu, so I just go by Grant Sparks, right? Like, it's super easy to know because I've got an Italian last name too, so I empathize. And then we had a handful of other folks who said they were stopping by. NLC said she was stopping by, I think. Hemley. But who else was on the list that said they were definitely coming by? Victor said he might. Not sure, but shout out to all you lovely faces. We hope that you have a great time this week. We hope you don't get sucked into the hype either, because we do have to remember it's not about the hype, it's about building. And we really need to build. I'm excited with the things we're building together, Aussie. Like, we got to move on this stuff. And we'll probably leak a little bit, like maybe even against Jarrett's will, on Friday. We won't help. You can't help but talk about the stuff you're excited about with your people. So we'll probably share with that at Connolly's in New York City. But aside from that, everybody, thanks for stopping by. This is Aussie with Decentralized News. I'm Grant with State of Spark and Not Crypto Bros, and we'll catch you next week. Take care.